traders, this is Sandra with Trading Made Simple. I'm here to show you short-term proven strategies. People think trading is a one-size-fit-all market. It's not. We live trade and train daily. Let's talk trading. Hello, hello. How's everybody doing today? So the first thing we're going to do is go over last week's trade. So here's CVX. We were in a debit spread, a call debit spread. And here is Friday's candle. And what we were looking at was that we were above the 20, and we were looking as if we were going to break above the point of control for the next following week and actually end up to the high here, the weekly expected move high, which was around the 162 level. And the next following day, boom, we went down, 50% stop loss got hit. Now, the next following day, I took a look at it. You could have easily re-entered the position where we left off at, got right back in, and look where it ended up going. So when we, who coined the term diamond hands, right? If you had diamond hands that could hold through that debit spread, depending on how many contracts you had on, how comfortable you felt, look what happened the next following day. Not only did we get a bullish pump, but we actually did end up, let's see, that high there was 160, 169. So you would have been able to make your money back basically with some profit. However, we did not in this trade. Took the 50% stop loss and I was done, but it did end up going. And that's how those weekly expected moves, if you have an indicator that helps you to identify that, how that could really help you take a look at the chart and kind of see what's planned. Now, the weekly expected move high for CVS was a 160, 138. And look at the low down here, 154. Not only did we hit both, but now this is our range for next week. Not interested in CVX right now, but let's take a look at some of our major indices, and then please go ahead and send me some of your stock recommendations to take a look at, and we'll take a look. So on a daily chart of SPX, you could see that we were actually traveling quite well, and we were flirting because every support and resistance level that you have on your chart is basically called a fake out zone. And the reason is because as price is getting over, in this example, to support, it really is trying to identify, is this real support? Are we gonna, bounce up and go back up to resistance? And so as we were flirting with that, you could see we hit the weekly expected move high this week, 54.79. And everybody thought that we were going to break out and start heading higher to our daily resistance level. But instead, what did we do? It was a fake out. Boom, came right back down. And now we actually are below this channel, extremely bearish here. So we are doing a correction. Now, typically speaking, when we're in a bull market, we often have a correction between 5 and 20%. 20% is pretty heavy. But typically speaking, between 5 and 10%, that's pretty average if you look back in history. And so as we look at a 4-hour chart, you can see that we still have a lot of room to go here. Not only did we break below our weekly expected move, but we are lower. Now, 68% of the time, we actually tend to bounce back and close within that expected move. But look at how far away SPX is from that expected move. I mean, 53.77, you're talking about 70 additional points to try to get back in there. And if we close below this weekly expected move, then it's very bearish for the next following week. And you could see how the weekly expected move that the market makers created, look at where it's at right now. So the high, because we could take a bounce because nothing goes in a straight line. I wish it did, but it doesn't. If we do take a little bounce at support at some point, we may end up getting up to 54.36. That's next week's high. And then also a point of control for next week is going to be wherever we close today. So our point of control is where we close the previous week. And then from there, if we open up higher, we have an opportunity. The the statistics for that opportunity of hitting that weekly expected high is greater. If we break below that point of control, then it looks like we're coming down to other support levels. And that's the way that you just follow price action on your chart. It doesn't have to be difficult. The other thing that I'm keeping an eye on is momentum. And the reason is because momentum drives price. So if momentum actually drives price, we can actually see what's happening with momentum on the chart. So as we get to the 200 level, and I'm just looking at this 200 level on this oscillator, you could see that this is typically an oversold category. Whether it's oversold on the bottom half or it's overbought on the top half, it actually acts as support and resistance as well. And so as we take a look at the chart, you can see that we're not even there yet on a daily. We still got a little bit of room to go. And that could be the last pivot high right here at 52.64. So around that zone, remember, it's never a specific straight line, but at that zone, this little area of the last pivot high, I love pivots, by the way. I think it's a great way to identify higher highs, higher lows, and etc. So as we look at 52.62, I'm looking to see next week, do we take a bounce? And if we do, we have a probability of coming up here to 54.38. We'll see where we close this week. Let's take a look now at the QQQs. We'll just run through the indices before we try to take a trade here. Now, oftentimes when you get, look at this downtrend, guys, on a daily for the Qs, wow. Had a little bounce because nothing goes in a straight line. We went down, kind of went sideways, went down again, a little bit of sideways, and now we just completely broke down below that channel. And look where the weekly expected move high is, right where that channel, which was once support, is now resistance is. And we're kind of vacillating right on top of the daily last pivot high, which was 449.43 on the Qs. And so that's what we're looking at right now. And you can see how momentum is heading straight down. So looking to see what ends up happening. This is like a freight train. And when there's this much power going down, it's very different than when you have, as we say, price when we go up, it's like a staircase up. But when price goes down, it's like an elevator. So think about the momentum that occurs with an elevator versus walking up steps. So to turn it around takes a lot of effort. And so what does that turnaround mean? Well, visually, what it means when you take a look at a chart is that price typically has to like put the brakes on, and then it will go sideways for a period of time as it's trying to get its energy to turn the bus around, is what I usually call it. So just to kind of give you an analogy or to try to put it in a frame of reference that you can identify this with visually, but it really is like a bus that lost its brakes going downhill, and for it to gain its footing, it needs to come to a stop, turning the wheel. It's like it's a lot of effort. And so when we go down, it's a lot of effort to come back up. Now, typically with a flash crash, we had this little situation this morning where there was tons of huge orders. I don't know if you were looking at time and sales this morning. We do that in the mornings. And we identified like huge orders coming in from institutions for puts on SPX. And so we could immediately see, price just slamming down this morning and took advantage of it. But when we have this type of movement, it's going to take a while to see if we can get some momentum to get us back up above the zero line. And it needs to happen on all time frames. So it will take a while. I'm looking for a base is what a lot of people would call this, right? We need a base at some point. Where is support actually going to hold for the indices? Now, when we take a look at the indices, last week IWM and DIA were having great weeks. Had a little pause in the QQQs and also in SPX. And because there's sector rotation typically in July and August. And that's standard. And so as we take a look at that, but when you see all the indices go down, there is no sector rotation right now. Everyone's, experiencing the correction altogether. And so when you can see that, then you can recognize that, oh, wait a minute. If you are not a put trader here, if you don't do options and you don't sell stock, then you may just want to hold the brakes until we actually get some basing, and then we can get some normalized price action. And then from there, we could start utilizing our support and resistance levels to get us there. And one of the best ways to do that is just look at your weekly expected move, because it gives you a frame of reference so you don't have all the biases that come into play. You know, you're watching programs, you're watching shows, you're listening to the news, and there's a lot of narratives going out there. And so if you can just identify where your expected moves are, you can then, keep your frame of reference focused on just this week's movement if you're a short time options trader or stock trader. All right. So from DIA, let's take a look at IWM. IWM, wow, what a cliff fall off right here. So we're now below the previous high here on IWM on a daily. And so really it's got some room to come all the way down here to support, which is the last pivot low, and that's at 197.43. So what I'm saying is though we are oversold, there's no ifs, ands, buts about it. This could go lower, believe it or not. We could base out a little bit and then go lower before we actually take a bounce. But as you can see, each one of these indices have their expected ranges to keep an eye on. And today's close will determine point of control for next week. I hope that that's an easy way for you to kind of identify price action. And you can do that, by the way, on a daily chart as well. Whatever the previous pre-market high and low is, by the way, if you're a day trader and you're looking to get some foundation on your day trades, all you have to do is look at your extended hours, your pre-market high and low, and that's basically your trading range for the day. If we break above that pre-market high, then you are trending bullish. And remember that the market only trends either bullish or bearish, and I mean trends like 15-20% of the time. So if you're not range trading and you actually break out above the pre-market high, then you're trending bullish. If you break below the pre-market low, you are trending bearish, and you should take the appropriate trades because we are trend traders. As soon as you break out of that pre-market high or low range, very hard to do the reversion to the mean trade for all you reversal traders out there. I know a reversal trade is often fun when you're looking at healthy price action. However, when you are trending, very difficult to make profit on a reversal. Keep that in mind and start watching the chart and see if this resonates with you. All right, let's go back to some comments and see if there are any trades or stocks that I could take a look at for you. Let's see here. Momentum indicator appears to show a divergence. Oh, interesting. Yeah, this is a 15-minute chart. Let me take a look and let's talk about divergences. So right here, if we look at a daily, right, we can see on a daily chart, there is no divergence on SPX. But let's take a look at some shorter time frames. Even here, I'm not really seeing a divergence. Not at all, not yet. And let's take a look at here. So here there's a divergence on a 15-minute chart. So on a 15-minute chart, what this is showing you is that momentum is actually moving up, isn't it? From the low here of momentum. And look where the low here on momentum is with price. It's actually higher. And then over here, it's lower. So we call this a divergence. And what that means is that eventually price is going to start to follow momentum because momentum drives price. So as we see this divergence, and by the way, any type of momentum indicator like an RSI can be used to identify divergences. Now, the only thing I don't like about divergences is that you don't know when it's going to happen. So even though you can see the divergence, there's no way to really identify when that could happen, whether it's going to be right now, so I should put a trade on, or if it's going to be an hour or maybe tomorrow. So because of that, it makes it a little difficult to identify. I like to see the divergences on a daily time frame because it's really more of a stable long-term time frame. So I typically don't use divergences too often. for like day trading and stuff like that, because it's quite unpredictable. Because now that we looked at a 15-minute chart and you saw the divergences, look at how the 5-minute chart looks like, which is a perfect time frame to do day trading with. And as you can see on we're just going sideways here. Clearly, that's exactly what's happening. And so as we're now, whenever we broke below this gap here we have, and we're going sideways. So we could do one of two things. And the thing that I'm looking at on a day time frame is for us to break above that 20. To me, the 20 EMA is my reversion to the mean. Some people use a VWAP, some people use other things, but this to me is like really helpful. It's very clear in the years that I've been trading to identify that. And so as I look at that, I see, oh, the 20, which is the blue line. Sorry, I use this white line, this 6 EMA for trade automations. But when I take a look at this 20 EMA, I'm really looking on a 5-minute for price to get above that. And that could be for any stock, ETF, or indice. And as it does, it is really reminiscent of like somebody using the fibs and saying, oh, it's gotten over the 68 point whatever zone, the golden fib level. That means a trend change. And so for me, if we can get over and stay over the 20 and we have positive momentum breaking up above the 0 line, you should start to see a trend change, us staying above the 20. For me, anything below the 20 is bearish. Anything above it is bullish. However, you also have to follow the higher time frames, right? I mean, just because this breaks above the 20 doesn't mean I'm all in for calls. I mean, we are definitely bearish. The trend is bearish, so be careful on your reversals today. There might not be any. All right. Very great question. So thank you for that. I appreciate it. And great identifier. The momentum indicator appears. Let's see. No other charts here. Let's see. Dow Jones Industrial Averages down overnight. Yeah. Oof. Hopefully you guys were able to take advantage of this movement and make some money. If you're not making money from these types of moves, then start working on that. That's a psychological thing where a lot of traders are just watching what's happening, but they're not really acting on it. They feel as if the move has already happened. Remember that you could always cut your losses short, and taking action is really important in the trading industry. Let's see. All right. So no other things. So let's take a look at the watch list and see if we can put a trade on. I'm really looking for something to base out here. If we don't have a base, then price can continue lower. And I think, let's see, as I look at a day chart, can we get a little bounce? You know what kind of would be fun is maybe putting on maybe either a debit spread for up here to be really inexpensive. That's why I'm thinking about this, because right now is really not a great time to be putting on new trades for next week because we haven't based out. And so this is not an A plus setup. You need to recognize that and act appropriately. However, if you want to do a lotto trade, I mean, come on, my portfolio, I always leave a little bit of room for day trades. That to me is fun. It's not the way that I make consistent income. Typically it swings and 0 DTE SPX strategies, as well as 7-day, 14-day, etc. type of SPX DTE strategies for premium selling is how I make consistent income. But day trading is fun. But as I look at this, I can do one of two things. I could put a butterfly on as an example at the 540 level, 542 level, and look for a bounce next week. So maybe we do something like that. So how would we do that? Well, let's take a look at a weekly chart, by the way. We've broken down. I just want to revert back really quick. Sorry for the quick change, but I want to revert back that looking at longer time periods will show you more information than being very narrow into a short time period. So as we're breaking very important support levels on a daily, let's take a look at a weekly. Now on a weekly, this looks very different to me. And the reason is because look at how we're We're coming down and we're touching the 20. Now remember, the 20 for me is my point of control. This is a reversion to the mean trade is what I'm saying. And so as we come down and we touch the 20, you can see where we've done this before. Here we actually broke below it. We have a trend line up here. So which means that here we came up, we touched it, came back up and touched it. So we are right at the reversion. So a couple things could happen. We could see next week this starting to turn momentum, getting its energy, kind of like here. You see how this happened? So it may get its footing and start to turn around. And then we're still back in a bull trend, aren't we? So this is a correction within a bull trend. It doesn't mean that we're completely bearish yet. On a daily, we're looking at 529.33. So right now we're at 528. So we are below, which is a little bearish here, but it's not the end of the day yet. So really looking to see how we close today, and this being a weekly chart. And then look at how on a weekly we could go down to 515.06. So we still have some room. You can see down here how when it broke the 20, it came all the way down to the weekly expected lower end. So look at how on this one where it comes to the 20, which is the reversion to the mean, it comes to the 20 and stays above the point of control area. And so these types of identifiers can help you take a look at next week and go, I wonder if we just did a reversion to the mean. Because today everyone's looking at the chart and the sky is falling. But really, when you're looking at a longer term time frame, we're going, oh, this actually just looks like a reversion to the mean. It's not until we get with a closing weekly candle underneath this 20 that we then now are looking bearish. And we need momentum to be definitely inside, right, the negative category here below zero. But this could do like a little flip right here, just like it did last time. So that's what I'm looking for next week. Because we don't often, prices ebb and flow. And when we ebb and flow, it doesn't go in a straight line. And so because of that, if we take a little bounce, it doesn't technically mean that we're bullish again, but we'll have to see how price action stabilizes. So as we think about that, I'm looking at that for 540 range and thinking we could do a butterfly there. So now let's go over to the trade tab. Let me put that back on a day chart so I have my levels properly if you guys want to follow along or simulate. So let's see, 540. So this says 542. I'm going to do with a 540 butterfly. And so I'm going to go over here and, what do you guys want to do? Let's see, 3 days out, Monday, Tuesday, Wednesday. That'd be a big bounce. Let's do 4 days. Got 13. You see the expected move here, $13. That looks about right. How about 540? Okay, let's see. Let's get over to the 540 range on the call side. Okay, we got some open interest there, as well as some volume. So other people looking at, imagine that, other people looking at the weekly expected move and got some heavy volume as well as open interest in the same area that I'm looking at. So that is the 540 area. And then what I can do is just use this drop-down menu, go over to a butterfly, and take that 540, and now make it a little wider. You can see that this is only going to cost you $3 per contract, right? Because as we're doing options is just about leasing. You're just leasing 100 shares of stock or ETF for a period of time. So here we're leasing it for 4 days. So that 5 cents, 5 times 100 is $5. So what we're doing is we're just looking at this and going, oh, $2 for a butterfly, that's pretty cheap. Let's make this about 5 wide and see what that comes up with. So if we do 45 on the high end and we do 35 on the lower end, okay, so now this ends up being $66. And this is that we take a little bounce up to the 540 range. It is a lot. Let's see, 30, but we got 13, 30, 40. Yeah, let's do this. I kind of like this. So this is $60 per contract, guys. $60 per contract for next week. So you could take a couple of these as an example, and you're not risking uh, a lot of money here, but you're in the game for a bounce, knowing that the weekly chart is showing that we just did a reversion to the mean, and we're still in a bullish trend as long as we have weekly candles closing on or above that 20. So with that in mind, we could take a butterfly for 63 to 65 cents each, which is $65. And then look what your potential gain is here, guys. If you took this trade, you're taking $65 for one contract. In fact, let me edit this so for those of you that are only doing one. If you take one contract of this butterfly will cost you $66, and your max profit is up to $434. So really on this trade, we're looking for time decay and we're looking for price to rise. Now, if you are not in sync with my timing on this and you want to go later, you can do the same exact type of trade, but just doing it later. You could do this on SPX, by the way, and not have to worry about closing out your trade if you're in profit. Because we are taking an ETF, you need to make sure that if you are in the money by the 4th, that you end up closing your trade. You don't want to be put any type, you don't want to be exercised and have a whole bunch of, SPY ETF as an example. What you want to do is close out your trade and take your profit, because that is the point of option contracts for the most part. So that's what we want to do here for this trade, and I like it, so I'm going to go ahead and send it in. Now, with that in mind, could we look at the chart and say, hey, I want to do both? I don't really know if we're going to be bullish or bearish, but I'm thinking that, we may hit one or the other by, let's say, the same time period next Wednesday. You could actually, is that Tuesday or Wednesday, by the way, guys? For the 4th. I'm gonna have to take a look. But anyway, whether it be Tuesday or Wednesday, but you could do the same thing on the opposite end and say, oh no, I'm bearish. I think this may end up getting to 515 because we still have a lot of momentum coming down and it could hit that 200 line. I actually don't think so personally, but we'll see. So any questions on that, guys? Do you have any charts? We got a couple minutes left. Thought I was jealous seller BA puts at 5 from. Wow, that's awesome. Congratulations. Oh, backwardation. Yep. Short the Dow. Well, everybody's shorting everything right now, right? But remember, ebbs and flows. Nothing goes in a straight line. And we should probably be seeing a little bit of a bounce, a little bit of a correction. Some people are going to start taking their profits. When they do take their profits, that typically will make the market makers actually start buying calls, selling puts, etc. And so that will change the market as well. But this is actually looking a bit bearish, and we're all the way down here on our SPY daily, coming down to the 524.86. That's still, boy, $4 away, guys. If we take a look at our Market Watch feature, this is the S&P 500. You can only see a couple names out there that are green, everything bright red. So everyone's following suit here. The names that we do actually have that are starting to look, let's take a look at this. Anything looking long. So we have UNH, MA, MasterCard, let's see, PG, J&J. So defensive names, right? So kind of like a risk off situation now. People are looking for risk off. And so as you can see, actually what's long, you can definitely see some of the trades here. Just by looking at Market Watch, you can visualize, what is, what's moving and what's not. Apple looking interesting. Let's take a look at Apple. Apple just really looking great here. We got a dividend coming up. Typically, stocks will move down towards a dividend date. Just be mindful of that. That's on, let's see, August 12th. So we still got some time. Depending on where we close today, you can see where the weekly expected move is for Apple. Either Apple ends up going sideways for a bit, or it's going to take a pop up to 228.95. We're going to see where it closes today, and that's going to be point of control. If it opens up next week below that point of control, then we have a good probability that we're going to head down and hit that 216 level as support. If not, and it still continues to rise, we have a good probability of hitting that 228, as it is completely strong in the market. How interesting is that? And then AMD also looking good. Now, for whatever reasons, let's see here, AMD, bouncing off a daily trend line right here, right? That trend pivot line holding as some support here, but it is a downward going. So we really need to pop above this last pivot low here at 160.61 and see where we're going next. Let me just take a look at a weekly on here. Ooh, on a weekly, it doesn't look so bad, but we did break consolidation AMD at 141. Looking for AMD to get back into its consolidation range of 141. If so, we can get up to 143 next week. And wow, look at that engulfing candle. But you can see, by the way, when we take a look at a chart like this is a weekly chart. When we take a look at a chart like this, and you can see this huge candle, right? Huge engulfing candle. And then the next one smaller. And then the next one, the body of it is smaller. So you can see that the momentum of the downward motion of this stock is lessening. It's lessening. And you can see that actually too with momentum. Got the drop off, and now what are we doing? Kind of going sideways a little bit. And so you can see that not only in the candle pattern, but you can also see that here. Zunaid, sorry about that. I was looking for you a minute ago, and I thought, oh, am I supposed to be on for longer? I wasn't sure. Oh, I'm sorry, I can't hear you.
It would be nice if I unmuted, wouldn't it? It would be. It would be nice. But no, I just want to say I appreciate you coming on. Looks like you got a nice little trade out idea there on the AMD side of things. Any other final thoughts from you before we go?
No, looking for some basing, looking for some support here, aren't we all?
Yeah.
You could tell on a weekly chart, this is kind of a decision point. I think next week will be very telling. I would be risk off here. I would play a little lotto bets, but I wouldn't be making any, big, huge investments right here. I would want to see a little bit of basing before we get some healthy price action, figure out if we're still bullish or if we're going to have a deeper correction.
All right. Well, I appreciate it. I remember I mentioned to you the Trade Zero, the competition aspect of it. So I just want to kind of quickly share that for the folks that are watching as well. So this is our trading competition that we are putting on. It's powered by Trade Zero. You get a chance to win up to $30,000
Wow.
because it's going to be 3 competitions. So the first one starts on September 15th, goes for a month long, and the first place and second place and third place get a cash prize.
Nice.
And then the second contest that happens, we obviously up the prizes a little bit, and then you've got the third one that we're going to end the year off with $15,000. So
Wow.
if anyone's interested, I'm gonna go ahead and put the link in the chat. You're welcome to join. I just went ahead and signed up obviously last Friday because that's when we kicked off, but I'm excited. Should be fun. A lot of money to give
Yeah,
away.
that looks like a lot of fun. I look forward to it.
Awesome. Appreciate you. Thank you so much. Talk to you
Okay,
soon.
we'll see you next Friday.